Let's now get the thoughts of Security Bank Chief Economist Dan Roces. Sir, the country's inflation rate hit a new 14-year high in December at 8.1%. Have we reached the peak yet?
Well, I think we are at the peak already. No? What we saw in the report earlier was a slowdown in the headline inflation rate month on month, and then an acceleration in the core. No? So headline inflation actually grew 0.3% month on month for the November to December period. No? That's much slower than the 0.9% it posted during the October to November period. No? So we're seeing some slowdown in price growth already. It was driven mostly by transport costs offsetting or lower growth of transport costs offsetting prices on the back of lower oil prices and a stronger peso during the period. On the other hand, rising core inflation actually indicates that price increases were more widespread. It's not just limited to certain sectors or goods. And of course, it was the holiday season, so businesses may have taken advantage of strong demand during the season.
A lot of different factors. But what else should be done to temper rising prices besides raising interest rates?
Well, there needs to be a complementary fiscal response. And I think that's there has already been some initiatives there. You mentioned earlier the extension of the tariff exemptions to certain food items, and that will be very helpful towards reining in inflation.
That's right. Well, the Philippine economy is consumption-driven. How are Filipinos coping with rising prices and the need to still spend for basic necessities?
Well, the need to spend basic necessities will always be there, and as such, some consumers will likely swallow the higher prices, so to speak. Others will probably scrimp, looking for other complementary goods to or substitutes for their consumption needs. There will be a post-holiday consumption slowdown. And also, as mentioned in the report, favorable base effects from high inflation levels since March 2022, that's expected to set in as well. So likely inflation will fall within the target by the middle of the year. So that actually gives the central bank some wiggle room to diminish the size of hikes so as not to slow down domestic growth too much while still driving home the inflation fight.
Is there a threshold for the economy to absorb further rise in the cost of borrowing and still post growth? I mean, how will this impact our kababayans naman availing of loans for housing and transport?
Well, there's no set threshold. It's really about, you have money supply, you have price growth. Right now, that's why the BSP is focused towards containing inflation, because even if policy rates are higher, at least it could be offset by lower prices. And this actually the twin mandate of the BSP, price stability and also economic growth, which is actually quite difficult to balance. So I guess, and we agree with this, that the first order of business will be to rein in inflation.
Well, you mentioned earlier, strong peso. The peso closed at 55 pesos and 75 centavos against the greenback today, much improved from the nearly 60 pesos per dollar level for some time last year. Can we expect the currency to sustain its stronger performance to provide Filipinos some relief? I mean, considering the country heavily depends on imports for essential items such as food and oil.
Well, the risk to the exchange right now is actually our twin deficit. Notably, one of the deficits that we have to watch out for is the trade deficit. So imports will be growing faster than exports. Our export sector is getting affected by some slowdown with our trade partners, notably China. So what that means actually is more demand locally for US dollars. So that's depreciationary in a sense. So there's still a lot of factors that will affect the FX level. And also, some fluctuations in the dollar index will be affecting it as well. But locally, I think, we have to be wary of the deficits that we have. No? So that's why the BSP is trying to match, no, or go toe to toe with how much the U.S. Fed is raising rates. No, that's in order to keep the peso afloat. No, while inflation is expected to go down.
So given all of these factors, what is your outlook for prices in 2023?
Well, we do think the average could still be above target, no, but that's quite a reversal, or actually a reverse trend that we saw in 2022. No, so we'll likely see low inflation in the second half of this year, mostly because of base effects, no, and other favorable conditions as well, given that prices have been spiking, no, mostly in the second half. So that will give a favorable reading in terms of the headline. And what that means is inflation could likely fall within target by then. No? So it's going to remain elevated, mostly because the first half will still have to contend with higher prices still. No? So, but once those base effects set in, no, we'll likely see levels or the rates actually go within target. No? What we have to watch out for at the moment is the month